pre-series round will support expansion and upgrade operations and logistics.
Adopt AI, an agentic AI firm, gets $6 million in a seed round that was led by Elevation Capital. The startup will use the funds for its innovative platform that empowers applications with intelligent agent capabilities.
AI firm Hyperbot raises $6.5 million in a Series A round. The round was co-led by Arkham Ventures and Atira Venture Partners. Existing investors Kalari Capital and Sunicon Ventures doubled down on their bet. The fresh capital will be utilized to expand its go-to-market initiatives in the US.
Google is all set to launch a new fund aimed at investing in artificial intelligence startups. The startups being backed under this are called AI Future Fund will get investments from Google, early access to AI models, and hands-on support. Well, those are the headlines that we're tracking for you today on Startup Street. But in what's brewing today, healthy snacking brand Farmley has completed a $40 million Series C fundraise, which was led by L. Catterton, a global consumer-focused investment firm. Now, the company says this transaction will help it strengthen its foothold in India's growing health snacking market, penetrating untapped regional markets, as well as developing new product formulations. For more on what the funding really means to the company and the path ahead, joining me now is the co-founder of the company, Abhishek Agarwal. Abhishek, welcome to Startup Street. Thanks very much for your time here. Tell us about this $40 million round, a huge leap from your last round in December. How much of this is primary? How much of it is secondary?
Thanks a lot for having me on the show. So we closed our Series C round, $40 million, led by L. Catterton. 70% of the round is on the primary, which will be used in the company for the expansion purpose, and 30% is for the secondaries on making exits to the initial and angel investors, and some for the ESOPs buyback from the initial employees.
All right. And can you share the kind of revenue multiple or give us a ballpark on the valuation at which this round was closed for Farmley?
So can't comment on that much, but the last year had been really great for us. We have seen almost 60% of growth in the last financial year, and seeing that growth journey and the kind of growth that this market is seeing, L. Catterton has decided to put in the Series C round. Yeah.
All right, so no word on the numbers, but tell us then, how will you deploy these funds? What are these untapped regions that you're talking about that you want to get into, and what new product formulations are you working on?
The funds will primarily be used for expanding our infrastructure and modernizing our capex to meet the growing demands. Secondly, it will be on the expanding our distribution channels. We are already very strong in the e-commerce and quick commerce space. So now this fund will be used in expanding our offline distributions across pan-India, region by region. And some of it will also be used in getting into newer markets apart from India, where we are seeing decent traction coming on.
And what are these markets outside of India, if you could tell us, Abhishek?
So outside of India, I think US is one market where we are seeing decent growth on the back of our flavored makhana range. Makhana is going through a global trajectory. It is obviously 100% of the makhana is grown in India. So it's seeing a global traction now. So we are on the back of makhana. We are trying to expand into certain territories, as I mentioned, in USA, Canada, Australia.
Okay. Okay, US, Canada, and Australia are the markets you're looking at outside India. But, briefly give us a sense of how sales have been shaping up for you. Of course, it's been a while since you started the company in 2017. What are your monthly sales now? And also, your reported revenues last were at 370 crores. How's FY26 shaping up, and how close are you now to profitability?
Yeah, so it's been almost an 8 years of journey for us. So last year, as you mentioned, we have closed at 370 crores in revenues. We are currently at an ARR of roughly about 500 crores. And we are looking to continue the similar growth trajectory, about 70% growth in the next financial year. This year is the first year when we have seen EBITDA profitability. So profitability is one thing, where we have our keen eye on. We'll try to grow sustainably this year as well. Obviously, there will be some key investments on capex, on brand building. But yeah, the trajectory to profitability is there.
All right. Abhishek, also a word on the channel distribution strategy. And this is something we asked, I think, almost all of the players in this segment, because you've been present online. More recently, of course, you've also forayed into the offline space. How has that played out so far? And what is the split, if you look at sales or revenues, between offline, e-commerce and quick commerce, which is an important segment for you?
True. So from past 2 years, we've started the offline distribution. We have been really strong on the e-commerce and quick commerce space, which roughly contributes to almost 75% of our sales, 35% coming from the e-commerce giants like Flipkarts and Amazons, and rest 45% comes from the quick commerce space, which is Blinkit, Instamart, and Zepto. And we are the category leaders in this space across all three channels. Offline, we started, as I mentioned, in last 18 to 20 months. We started with modern trade channels, and then we started foraying into the general trade in specific territory. In our good hero product range like flavored makhanas, healthy dessert like date bites, we have been seeing a good traction across different territories. So as of now, we have almost 15 to 16% of our sales coming from offline channels, and the rest coming from the institutional channels like airlines, some part of it from the government channels. But yeah, this is one segment which is offline, which is currently at about 15%. We are looking to get this number to 30% in the next 18 to 20 months. We are currently present across 20,000 stores in the offline channel, and the idea is to expand this up to 1.5 lakh stores in the coming 18 to 20 months.
All right, that's a big expansion planned in the offline space for you, Abhishek. But you spoke about your makhanas and date bites and whatnot that you have. When you're talking about this product innovation, again coming back to that point, are you looking at adjacent categories like protein snacks, breakfast cereals, or when should we expect these new launches, if at all you're considering them?
Yeah, obviously. So we invest heavily on the R&D on the product formulation side, which is one of our core USP on how do we maintain and how do we elevate the taste and not compromising on the health elements. So that's where we invest heavily on the R&D side. We are currently very strong in the flavored makhana space, healthy dessert space, your dry fruit mixes and trail mix space. Going along, yeah, we are on cards to launch more on the go snacking for making it more accessible at the price point of say 20 rupees, 30 rupees. That's where we are eyeing, to launch more products. And obviously, growth and the kind of number of stores that this kind of price point can cater to, that's where we are seeing the major expansion coming from.
All right. Finally, Abhishek, just to get a sense of how large the play for Farmley could be. Of course, in India, you've been growing your business and you spoke about piloting in the US, Canada, Singapore, and so on. What is the response outside of India so far, and which markets look most promising, where you see meaningful possibilities for really scaling up your business?
I think all the markets where, this healthy snacking as a segment is picking up really well and where this segment has already matured. These are the two areas where, we are seeing good response. So I think US, Canada, Australia, I think these are three markets where we have received decent traction and decent response. Again, we are very early stage in the journey there. So yeah, learnings on the way, and then we'll see how to, capture markets there.
That, Abhishek, thank you very much for giving us your time today. It was a pleasure speaking with you. Thank you.
Thank you. Thanks for having me on the show.
Moving on the hot seat today, we've got Fuze, which has raised $12.2 million in a Series A round led by Galaxy and UAE telecom giant E&. Founded just 2 years ago, Fuze has already processed over $2 billion in digital assets and is now eyeing India for its next phase of growth. With new stablecoin and payments infrastructures in play, the startup wants to power banks and fintechs with regulated crypto solutions. Joining us now to break it all down is Arpit Mehta, the co-founder of Fuze. Arpit, thank you so much for taking time out and being here with us on Startup Street, and also congratulations on raising this Series A round. What sort of gap in the financial infrastructure landscape is Fuze specifically solving for, and how do you sort of differentiate from, existing digital asset providers?
Yeah. So if you think about the overall financial services space, right, largely you can think of wealth trading, you can think of payment, cross-border or domestic, you can think of lending, you can think of insurance, right? Most of these techs have not been rebuilt over the last several decades. Right? What we are building is the infrastructure layer for some of these verticals, powered by crypto and by association blockchain. Right? We always sit on the infrastructure layer. We are very B2B. So we work with large banks, fintechs, enterprises to help them launch different crypto products. Right? Some of the large banks here in Middle East work with us, right? Like where we are. So we are fully regulated from a crypto perspective and from a payments perspective in several markets. So we sit on the infrastructure layer, and then we power these large enterprises and help them innovate and launch different crypto products very fast, right? So we work
Sure.
with banks to help them launch crypto trading products. We work with payment companies and remittance companies to help them build blockchain-powered payment solutions, right? And so on.
Right, absolutely. And with over $2 billion in digital asset volume already processed, how are businesses and institutions actually using your infrastructure today, and where do you see the fastest adoption?
Yeah, so I think a lot of adoption over the last 1 year has been on the payment side, where within crypto, stablecoin has found perfect market fit. Right? And then especially on the cross-border side, where across the world, entities and consumers face challenge on moving money cross-border. Right? We have built a complete infrastructure for these stablecoin payments, be it wallet as a service, liquidity as a service, on-ramping, off-ramping in multiple corridors, regulatory compliance as a service, because that's a huge heavyweight for any institution who is trying to build a fully regulatory conservative solution in this market. Right? So Fuze provide that full stack. And then especially in the stablecoin payment segment, we have found a huge product market fit across multiple markets.
Right. And, we're going to delve into that a little bit further. But before we go there, you've raised this $12.2 million. How do you plan to use the funds?
Yeah. So this whole space is very new overall as an industry, right? And in a lot of products that we are building, we are category first or the market first, right? Aim is to go deeper into launching some of these products, right? Second, growth across multiple markets, and which also means licensing across multiple markets, right? Which requires a significant regulatory capital investment.
Right, absolutely. And, you're now eyeing India, right? And how are you sort of approaching the regulatory engagement here? And what would a green light from the regulators mean for your India playbook at this point?
Yeah. So India definitely is a huge market, right? But also being Indian founders, we understand Indian market very well. Right? At the same time, we are regulatory very conservative. So at this point, we have been continuously engaging with the regulators, with the authorities to figure out the overall play. We believe that the way regulators are looking at crypto versus how regulators look at stable coins and payments, these two are very different solutions for the regulatory framework that would be required for these products. We are waiting for the overall stablecoin and the payment infrastructure, payment regulations to be clear. That's where we will go deep in the Indian market.
Exactly. You actually preempted my next question. I was going to ask you about this. You've just launched a suite of stablecoin infrastructure products. What role do you see stablecoins playing in mainstream finance, especially in the Indian and, the MENA markets?
So it's a very interesting question, because India market or a bunch of other markets, I would actually comment on the larger markets like where we operate, mostly emerging markets where there is a currency devaluation against dollar. I think especially dollar stable coins like USDT, USDC have really picked up acceptance, right? It is both time and cost efficient. So we see last year, just to give you a number, right? Like the overall value transfer on stable coin was $3 trillion. Right? That's roughly about 15 to 18% of Visa plus MasterCard combined. Right? So from a market perspective, stablecoin have already picked up a lot of transactions or a lot of growth, and most of these transactions are in emerging markets, right? Where consumers and entities generally face a lot of issues moving around dollars, right? Like that's where the major acceptance has been.
Right. And if you could quickly tell us, we're running out of time. You did mention payments and you said that's where you're seeing most amount of traction, but it is also a new vertical for Fuze, right? So how does your infrastructure power payments innovation, and could we see you, partnering with existing fintechs or even traditional banks?
Yes, we do. So we already work with a lot of banks and a lot of payment providers across the world. Right? As I said, we always sit on the infrastructure layer, right? So we work with global payment providers, global banks, and power their payment solutions for cross-border use case and soon in some markets for the domestic use case.
Right. And what does your current revenue model look like? How has monetization evolved with the launch of all your new offerings like the stablecoin infrastructure and payments? If you could sort of take us through where you hope to end this year, what you're making now?
Sure. Yeah. So, well, numbers are not public, but our business model is charging on per transaction majorly, right? That's where we make money. We are always in the flow of funds if the regulated entity or regulated infrastructure provided on the back end. Right? We aim to 3x the revenue that we had last year, I think will surpass that by a margin.
All right. So that's the plan going forward. All right, Arpit, thank you so much for taking time out and being here with us on Startup Street.
Thank you. Thanks a lot.
Well, on that note, we have to take a short break, but don't go anywhere. Up next, B2B e-commerce platform Jumbotail eyes a $120 million fundraise, which is expected to value the firm at $1 billion. A special conversation coming up on the other side.
Welcome back. You're still with us on Startup Street. B2B platform Jumbotail, which connects mom and pop stores to suppliers, is in advanced talks to raise $120 million from SC Ventures, Invis and others in a fresh funding round that could value the company at $1 billion. My colleague Aishwarya Anand spoke with Ashish, Jana, the co-founder of Jumbotail, to know more about the e-commerce platform's plans going forward.
I think we're big believers that small retailers and SMEs are the lifeblood of commerce in India. We will continue to build as we have done over the last 10 years. This is year 10 of the business. We are building for the long term. As and when there are opportunities, as good companies come along the way, we will definitely take a look. We've always done that. If there's culture fit, if there is, if it makes sound business sense, we will definitely look at that. But obviously the core business continues to focus on building a profitable enterprise that actually allows us to advance the mission that we're working towards, and that's something that will continue. Capital raises, acquisitions, etc., are things that any company that's looking to advance its vision with aggression and discipline will continue to look. So we are no different than anybody else on that.
Okay. So talking about profitability, I want to understand that the recent numbers that we have is from FY23, where your revenues doubled to 819 crore. The losses have also increased to 264 crores. So tell me, what does FY24 numbers look like, and what is the part of profitability here?
Actually, the numbers you're talking about, right, given that we are structured as a marketplace, it's, those numbers don't actually tell the full story.
Okay. What is the full story then?
So I think, focus, obviously, right? First 6 years of the business, we were a single city company, focusing on getting the right model.
Correct.
Through the process of COVID, we expanded the reach once we felt we had a model that actually made sense, unit economically, as well as providing value to the retailer. Over the last couple of years, especially over the last year, the big focus has been on, substantially improving profitability. Every trip that goes out today, on a daily basis actually makes money. Every city, from a contribution perspective, makes money. There is still some burn, obviously, but that's actually been the big focus, and we're very, very excited about what's happened over the last year. At the right point in time, we'll talk about numbers, but I think big focus was all new cities that we had opened up over the last 2 years, making sure that they get to the right scale, but also the right unit economics. That's something that we've made a lot of progress on. In fact, every trip that goes out and does delivery, and that's the unit metric that we measure, actually is profitable and covers not just the cost of the trip, but also large amounts of fixed costs. There's obviously still some burn, and that's what you raise capital from time to time. We're very fortunate to be backed by deep pools of capital, and so as far as we're concerned, continue to keep building in that journey. and we're very excited about what the future holds.
So by the end of this year, are there any targets in terms of your ARR, whatever it is that you're planning to hit? Is there any numbers that, if you could shed some light
at
on
the
that?
right point.
Or maybe like the growth rate, if you can talk about what growth rate do you expect to hit by the end of this year, if you don't talk about the exact numbers?
I think the goal is to continue to raise margins. The goal is to continue to, actually make sure that we generate more and more capital per trip, per delivery, in order to cover the fixed costs of running the business. I think we've made a tremendous amount of progress in that over the last year. I think the goal is to continue to keep doing that. And as that trajectory sort of proceeds forward, the numbers will take care of themselves. We don't necessarily set GMV goals or things like that. I think it's very easy to get GMV in the wrong ways in this sector. Okay. I think our focus is, it has to add value to retailers. It has to make sure that they are set up for success in the future. It has to help our brand partners, especially smaller regional brands, actually reach these retailers in larger numbers, actually have a level playing field to even some of the largest brands who are also good partners with us. I think as long as we're doing that, the numbers will take care of themselves. And we've had a long history of sort of seeing, when we plan something, sometimes things take a little bit longer, sometimes you get there a little bit faster. But as long as you're executing with integrity, as long as you're focusing on your customer, both retailer and their consumers, as well as the brands, these are the three integral parts of our ecosystem. I think it's a very, very large market that we're going after, and we're very excited about the outcome. I think as leaders in this space today, we feel very confident that the path that we're executing on is the right path. Results will follow in due course. We've already seen significant outcomes on the profitability journey. And when those numbers come out, we'll be happy to sort of have another conversation with you. I think that trajectory is what we're looking to continue.
Okay. So there were plans to expand your J24 store network to 300 outlets. How far are you on those plans? And by when, what's the target that you have to reach those numbers that by this year we want it to be done? At least give me something on the numbers.
I'll tell you, right? We have about a 70 store network in Bangalore.
Correct.
Right? It is, to me, again, I think in literally everything that we've done in this business, it's easy to, increase store numbers, right? But what's most important in this, right? There's about 2 million, Kirana stores in urban India,
Correct.
right? So there's no shortage of stores that you can actually help entrepreneurs run. So let me be very clear about what J24 does. Yeah. J24 is an entrepreneur-run network that allows the entrepreneur to actually transform their store into a modern convenience grocery store.
Okay.
Right? We provide a series of services to these entrepreneurs to actually help them get more traffic, more consumers in. So a typical J24 store actually has about 2.5 times the traffic that a normal Kirana store has. So it elevates the standard of living for the retailer. It makes them, ready for the modern consumer and their needs, which are obviously changing rapidly.
Correct.
And what we're focused on is making sure that our entrepreneurs are making money, which they are now in increasingly large numbers. We are set up to, obviously we have a B2B network that operates across 10 different urban clusters. It's set up to actually, scale the J24 business. But we first want to make sure that, given that this is entrepreneurs that we're dealing with, we want to make sure that every single entrepreneur that comes in has a great experience. The consumers that are walking into these stores have great experiences. I think that's what we've spent the last couple of years working on. Once you get there, which we believe we are now at, you're now set up to actually scale. Again, we'll no reason to hurry, scaling on any of these parameters. We do it at, a store-by-store basis. But obviously, we have a, a strong base of 10 urban, agglomerations across the country where, you have about 50, 60 million consumers. So, as we sort of look forward, each of those cities will start, seeing entrepreneurs come in. But there's a certain critical mass that we first want to get to in Bangalore. I think that's the focus for the rest of the year. And then, as those opportunities come up, we'll continue to scale.
All the best with all those plans. We wish to hear exciting announcements very, very soon. And thank you very much for speaking to us.
All right, so Jumbotail could be in line to become the next unicorn in India. But let's also take a look at some of the other news that we're tracking for you today. Japan's SoftBank Group has reported its first annual profit in 4 years at $7.7 billion. This was led by strong performance in its telecommunications holdings. The conglomerate also posted a net profit of $3.49 billion in the fourth quarter. SoftBank's Vision Fund 1, which invests in late-stage startups, made an investment gain of $6.1 billion in the quarter, while its Vision Fund 2, which invests in early-stage startups, booked an investment loss of $3.42 billion, and that primarily was because of the poor performance of some of the Indian-listed stocks like Swiggy and Ola Electric, which are part of its portfolio.
Starting June 17th, Amazon Prime users in India will have to pay more to watch ad-free content on the streaming platform. While the base price for Prime membership remains unchanged, an ad-free upgrade is going to cost users 699 rupees in annum or 129 rupees per month, depending on the package that they choose. This is in line with Amazon's global markets like the US, UK and Canada, where ad-supported viewing is already in effect. The changes will not affect users of Amazon's lower tier plan, Prime Lite, which already includes ads.
Well, Meta is also set to launch its Ray-Ban Meta smart glasses in India on the 19th of May, and those will be priced at rupees 29,990 rupees. Now, these are AI-powered glasses that support Meta AI and enabling features like answering questions about your surroundings, live translation in languages like English, French, Italian, and Spanish, sending out messages for you, making calls, and playing music through apps like Spotify and Apple Music. Pre-orders are going to be available on Ray-Ban's official website with in-store availability starting at the launch. Now, since their 2023 debut globally, Meta has sold about 2 million pairs of these smart glasses.
Walmart-owned Flipkart sees a churn in its top deck as 4 senior executives quit. The exits include a senior vice president and 3 vice presidents: Ankit Jain of grocery and large supply chain, Prajakta Kanaglekar of human resources, Anurag Singhvi from analytics, and Ganesh Ramaswamy, the CPTO of ClearTrip, have all quit and are moving out.
And Bangalore-based cloud kitchen startup Cure Foods has acquired pan-India rights for the donut and coffee brand Krispy Kreme. Now, with this move, Cure Foods will expand its presence in North India and lead Krispy Kreme's pan-India growth. And with this expansion as well, Cure Foods is going to get more than 100 or operate more than 100 Krispy Kreme outlets across India, a mix of dine-in stores and cloud kitchens.
And with that, it is a wrap on this edition of Startup Street. From Ritu and me, goodbye and many thanks for watching. More news coming up on the other side.
What have you got up your sleeve?
Well, we've got The Anarchy, which is a TV series adaptation of William Dalrymple's epic saga on the history of the East India Company. It really is a story that has to be told with that epic scope and scale, the way that the Game of Thrones or The Crown have been told.
So have talks begun with the Netflixes and the HBOs of the world?
Talks have just begun.
What are we talking about in terms of resources that you require to be able to put something down? Ballpark.
The per episode costs for shows like Game of Thrones and The Crown